So they co-invest because it's absolutely necessary. I feel that why do we do co-investments? First, we're sharing the risk, and secondly, we're sharing the capacities. And we know that the deal size today in impact is still relatively small. We're not seeing yet the 30 and the 40 million private equity deals. Hopefully, it will get there in less than a decade. But therefore, when you have small tickets, the time that you need to invest in analyzing a deal is so much that you need to share the cost somewhere. So it's a very costly process analyzing deals, and then you also bear the risk that the deal will not go ahead. So both for capacity sharing as well as for risk sharing, co-investments are very important, but they also increase the probability of the survival or the successful outcome of an investment. Why? Especially if the co-investors are bringing different aspects into the company. So the experience that I have are private equity investments where you have strategic partners, like a corporate that has invested in the company, that is in the same field like the venture, the same market, or in a very related market, let's say. So I know per definition that this corporate will bring in the necessary knowledge and help the venture with market issues, with market entry issues, for example, as we said before. You have an impact investor that has the knowledge of how to improve the impact footprint of the company and therefore increase its financial success chances at the same time. Other investors that are more focusing on different jurisdictions. For example, if the company wants to expand in Africa, there's nothing better of bringing on an investor from Africa that has done another 15 deals there, therefore knows the local challenges and that can help the venture. So co-investments are probably the solution if we want to scale up impact investing going forward. And I do liaise a lot. You have to have the network. Of course, it's very important. These deals will not just be shared over a platform only, maybe in the future. But so you need to have the network. You need to liaise as much as possible with potential co-investors in order to be able to identify these opportunities and do something together. There is a small risk. I didn't mention that before. Co-investments are great, but there is always a small risk that there's misalignment of interest over time, for example. And one of the main reasons why ventures fail is also governance related to the investors behind the company. So either they're doing too little, or they're expecting something completely different that's not feasible, or there are too many, and therefore you cannot have a common strategy for the company. So yes, it is important who you're going to choose as your co-investor and if you're aligned. But I feel that the entrepreneur should, again, as I said before, choose the right investors at the beginning before even they invest. A lot of people tell me, well, I need just to find the money, otherwise the venture is not going to go ahead. So any money is good. Yes, I understand the pressure, but for me, I don't feel that any money is good. There is always a right investor. It's a little bit like the personal relationships, right? If the chemistry is there and if you have the right investor that has the right aspects, to be able to help the entrepreneur is so much better. So the entrepreneur should, once the entrepreneur identifies the right investors, I feel that should be just transparent with his reporting activities at the same level, equally to all of them, simply said. This is another aspect that a good, active, hands-on co-investor can bring into the company, his network. And his network also on the capital financing side, of course, and it's the easier way. When another investor suggests me a deal, per definition, I start here, because I know that the other investor knows me. Therefore, the deal will have a fit in terms of my criteria. But secondly, because it's pre-checked, it's pre-analyzed, it's the comfort level is always there. So probably I will pay a little bit more attention to what comes from another investor, and the investors know each other if they can work together. So therefore, we're coming back again to the governance aspect, that once these two investors are going to join forces to help the company go ahead, the possibility that they're going to disagree on the way is much lower because they have been working on other deals together in the past. I'm Kostis Tselenis. I'm a senior investment professional with a focus on sustainability and impact investing.